Bitcoin market overview. Latest data, technical analysis, and trends, US and global. 1. Latest market data. Price and market capitalization. Bitcoin is currently trading around $85,000, up approximately 6 to 8% in the past 24 hours. The early March rally pushed Bitcoin's market capitalization to approximately $1.69 trillion, accounting for nearly 60% of the total cryptocurrency market capitalization. The 24-hour trading volume stands at $50 to $55 billion, reflecting strong liquidity. Active addresses. On-chain activity has been robust. The number of daily active wallet addresses ranges from 800,000 to 1,000,000, with occasional spikes exceeding 882,000 addresses on highly volatile days. Towards the end of February, active addresses increased by 8%, signaling more retail participation during market corrections. Exchange inflows-outflows. The overall trend remains net Bitcoin outflows from exchanges. The amount of BTC held on centralized exchanges has dropped to approximately 2.7 million BTC, down from over 3 million BTC 6 months ago. This indicates that nearly 300,000 BTC have been withdrawn over this period, signaling a strong long-term holding sentiment and a decreasing supply of BTC available for immediate sale. While a portion of these withdrawals are being moved into ETF custody wallets, the overarching trend still suggests that circulating supply is tightening, a bullish indicator. Long-term holders. Investors holding BTC for over 5 months now control about 13 million BTC, representing nearly 65 to 70% of the circulating supply. During the recent surge past $100,000, long-term holders sold approximately 1.1 million BTC to short-term holders, securing significant profits at high levels. Despite these sales, long-term Bitcoin holders still maintain near-record holdings, indicating continued confidence in Bitcoin's future value. 2. Technical indicators and market analysis support and resistance levels. From a technical standpoint, Bitcoin's key support level currently sits around $80,000, marking the lowest point from its late February correction. If this level breaks, the next significant support zone is around $75,000. On the upside, resistance levels are found near $90,000, with the next major psychological barrier at $100,000. In the short term, Bitcoin needs to reclaim $86,000 to sustain upward momentum. Otherwise, selling pressure could push prices back toward $80,000. Momentum indicators. The late February pullback has cooled some of Bitcoin's overheated indicators. The Relative Strength Index, RSI, on the daily chart has declined from overbought territory, 70, to around 60, suggesting a neutral position. Meanwhile, the MACD, Moving Average Convergence Divergence, recently experienced a bearish crossover, death cross, in late February, with the MACD line falling below the signal line. This suggests potential continued consolidation in the short term. However, the 50-day moving average, MA50, remains above the 200-day moving average, MA200, forming a golden cross, which is historically a bullish long-term indicator. Market volatility. Volatility remains high. The Bollinger bands have expanded following recent sell-offs, with BTC recently touching the lower band around $83,500 before bouncing back. This indicates that volatility could persist, with the market experiencing more sharp price swings. Meanwhile, the Fear and Greed Index has declined from greed, 65, to around 55, reflecting a more cautious investor sentiment. Derivatives market data. In the futures market, open interest, OI, for Bitcoin remains around $21 billion, with only a slight 1% decline following the recent correction. This suggests that leveraged positions are still active. Funding rates on perpetual futures remain slightly positive, 0.01% every 8 hours, but notably, there was a brief moment in early March when funding turned negative, a rare occurrence this year. Negative funding rates indicate that short positions are dominant, which can often coincide with a short-term bottom. The recent liquidation event, where over $200 million in long positions were wiped out in under 30 minutes when BTC dropped below $80,000, has also helped flush excessive leverage from the market. 3. Macroeconomic factors impacting Bitcoin. U.S. Federal Reserve policy. Macroeconomic conditions in the U.S. remain supportive of Bitcoin, Inflation has gradually cooled to around 3% by late 2024, prompting the Federal Reserve to pause rate hikes and signal potential rate cuts in 2025 if inflation remains under control. Some Fed officials have even hinted that rate cuts could begin as early as March 2025 if economic data remains favorable. Expectations of looser monetary policy have already benefited risk assets, with Bitcoin surging above $99,000 following a strong U.S. inflation report in January. Investors increasingly view Bitcoin as an inflation hedge, making Fed policies a crucial factor in BTC's price movements. U.S. stock market performance. Bitcoin continues to exhibit a strong correlation with U.S. equity markets, particularly the S&P 500. In early 2025, Bitcoin moved almost in tandem with the S&P 500, showing a correlation of 0.88. However, when BTC corrected sharply in February, 25% decline, this correlation weakened, suggesting that Bitcoin's decline was more crypto-specific, e.g., profit-taking and regulatory concerns, rather than being driven by broader macroeconomic factors. Regulatory environment in the U.S. Regulatory conditions in the U.S. are becoming more favorable for Bitcoin. The SEC recently dropped its lawsuit against Coinbase, marking a significant shift toward a more transparent regulatory approach. Additionally, the approval of spot Bitcoin ETFs in late 2024 has legitimized Bitcoin as an institutional-grade asset, opening the floodgates for traditional financial institutions to allocate capital into BTC. 4. Notable insights from key industry figures. Michael Saylor, the MicroStrategy CEO, remains one of Bitcoin's most vocal advocates. His company continues to accumulate Bitcoin, holding over 20,300 BC worth approximately $2 billion. Saylor has also been actively lobbying in Washington, pushing for pro-Bitcoin policies. Cathie Wood, the ARK Invest CEO, maintains an ultra-bullish long-term outlook for Bitcoin. She predicts that BTC will reach $1 million by the end of the decade, emphasizing that Bitcoin adoption is still in its early stages. BlackRock and institutional players. The introduction of Bitcoin spot ETFs has been a game changer, enabling institutions to gain exposure to Bitcoin through traditional investment vehicles. BlackRock's iShares Bitcoin ETF has already attracted billions of dollars, and analysts predict that institutional demand could add hundreds of billions to Bitcoin's market cap in the coming years. Number 5. Short-term, mid-term, and long-term outlook. Short-term, next few days, 1 week. Bitcoin is expected to remain in consolidation mode, fluctuating between $80K and $90K. Key technical indicators suggest a slight bullish bias, but further confirmation is needed. Investors should monitor upcoming U.S. economic reports, as they may trigger short-term volatility. Midterm, next few months. Bitcoin's midterm outlook is cautiously bullish. If macroeconomic conditions continue to favor risk assets and institutional demand grows, BTC could break past $100 and potentially reach 150K by mid to late 2025. Long-term, end of 2025 and beyond. The long-term case for Bitcoin remains strong, with several models suggesting BTC could surpass $200 in this cycle. Institutional adoption, ETF inflows, and a diminishing Bitcoin supply post-halving are expected to support long-term price appreciation. Number 6. Key trends and predictions. Bitcoin halving April 2024 is reducing new supply, historically triggering bullish cycles. ETF adoption is fueling institutional inflows, which could significantly stabilize Bitcoin's price movements. Mining sector remains strong, with increasing hash rates and higher transaction fees contributing to network security. Regulatory clarity in the U.S. is improving, making Bitcoin more attractive for institutional investors. Conclusion: Bitcoin is at a pivotal moment, with strong technical, macroeconomic, and institutional tailwinds supporting a long-term uptrend. While short-term volatility is expected, Bitcoin's fundamentals continue to strengthen, making it an increasingly mainstream financial asset. Investors should stay informed and position accordingly, as the Bitcoin story is far from over.